joined by Robert Kavcic, senior economist at the Bank of Montreal. And Robert, let's start with the numbers themselves. Are these even, I mean, we're going to have to find a way to manage them, but how do we manage numbers like this given the state of our economy?
Well, no, for sure, these are big deficits and debt numbers. This is almost wartime spending from one perspective. I mean, 16% of GDP on the deficit is the biggest we've seen since World War II. So this is obviously a crisis. And I mean, I don't think anybody is going to fault a very aggressive and quick response to deal with it and to keep households and businesses solvent through the worst of the pandemic, which is what we're seeing fiscal policy do right now. But how we deal with it, I mean, that's the question that we have not seen answered yet. And we didn't see yesterday in the fiscal snapshot either, because it was just a look and an accounting really of fiscal 2021. So the question is going to be, I mean, first of all, how does the economy recover? If the economy recovers firmly enough, then maybe some of these very aggressive support measures can start to roll off and we start to see the deficit come down pretty significantly next year, because if something like CERB or the wage subsidy is allowed to in fact roll off, that's going to take a huge chunk out of the deficit. The flip side is that if the economy doesn't cooperate, or if the coronavirus does flare up again and these measures have to get extended into next year, then it's looking like a longer path towards any kind of serious deficit reduction.
Yeah, what has struck me, and when we talk about, we know the program spending has been huge, over $80 billion for the CERB, over $80 billion for the wage subsidy, but they stripped it out. Even if we didn't have to go that deep into emergency program spending, just the hit to the economy alone would have meant a deficit of more than $100 billion a year. It seems that a real key here to starting to turn things around is to really find a way to stimulate this economy after we get to the other side. Will there be any money left for stimulus?
Well, so that was one of the actually interesting parts of the snapshot yesterday was not just that they laid out a lot of the measures that we already knew were on the books and the money was flowing. That was fine. But with respect to the wage subsidy, there was about $80 billion accounting entry for the wage subsidy, which looks extraordinarily big if you consider the fact that the take-up on that program so far through like the first week of July has only been about $18 billion. So if you read down in the fine print, I think they are of the view that they're going to transition that program into something that looks more like a traditional type of stimulus program. How it's going to look, we don't know. They're still working on the design, but presumably it's going to be some kind of mechanism to incent hiring or to incent people getting back to work after, either shutting down their shop or having households sitting on CERB for, as much as 16 weeks. So there are dollars built into yesterday's estimates that do suggest there's a pretty significant amount of stimulus to come out. And I think that's going to be a pretty important program to get businesses hiring again and to get workers working again. And we're going to have to just wait a few months to see what the exact design looks like on that one. But there are dollars accounted for something pretty significant in that update.
Now, Robert, in presenting these numbers yesterday, the finance minister, and we heard the same thing from the prime minister as well, even before we knew the size of the numbers, the fact that the government felt it had to be the ones to take on all of this debt, because if they didn't take it all on, then we, the Canadian homeowner, the household, the consumers, we would have taken it on in terms of borrowing against our homes, in terms of racking up our credit cards. When we think about it in that context, did they make the right choice?
Well, I mean, this is such a unique shock. I think fundamentally they're going about it the right way, and when you look at what the expectation was at the outset, the expectation was this was going to be a pretty short but extremely deep downturn, just given the nature of the pandemic. So the goal here was to keep households in their home, keep them paying their mortgage, keep businesses solvent, keep them paying their rent, so that when the virus situation is such that policymakers can say, okay, you can go back to work, you can reopen your business, that there are actually businesses there to come back and reopen. So that's the approach they've been taking, and I think that's probably the proper one. The other thing you mentioned there is the federal government taking on the burden of households. They're also taking on the burden of the provinces, and this is something that probably doesn't get reported on quite as much. But if you look at the amount of support measures Ottawa has pumped out, something like $230 billion worth, The provinces are only on the hook for, at this point, about $30 billion combined of support measures. So, we're going to see a deficit that's 16% of GDP at the federal level. At the provincial level combined, it might only be about 3% of GDP. And I think the commendable thing here is that coming into the pandemic, it was the federal level that had a lot more capacity to run deficits, to lever up and borrow, as opposed to the provinces, some of which were already a little bit credit strained coming into the pandemic. So there's the household side of it, but the federal provincial side of it is a pretty important one too. And I think as you drill down to the provincial level, the news starts to become a little bit less negative because Ottawa has just shouldered so much of the burden for everybody else.
And part of Ottawa's strategy, as they were telling us yesterday, is that yes, we've taken on this huge amount of debt as the deficit gets bigger and bigger and bigger, but we can finance it at a very low cost. And they're also financing it over longer term debt, 10 and 30 years. Is that a good strategy to lock in at these low rates right now? Because it's going to take a while to pay this stuff off.
Sure. Yeah, that is the strategy for sure. They're pushing out the term a little bit longer in duration for sure. Yeah, and I mean it's kind of compelling at this point, given the low level of interest rates that we do have. So from that perspective, it seems reasonable. The other thing too we have to keep in mind is that the Bank of Canada has been a big factor here too. So they're probably going to absorb the vast majority of the net issuance that's coming out of Ottawa over the course of the fiscal year, just through their quantitative easing program. And then from a debt service cost perspective, I mean, the big headline yesterday was this $1 trillion debt number. But if you look at the actual servicing cost on that debt relative to revenues, it's still only about 7%. So when Canada was back in real trouble in the early 1990s, those debt service costs were chewing up more than a third of total federal revenues. So from that perspective, I mean, we're still a long way off from big problems there. And the low level of interest rates plus the Bank of Canada stepping in to effectively absorb the vast majority of the run up in the deficit and the new issuance is probably something at the end of the day that's gonna help keep us in decent shape.
Before I let you go, quickly want to ask you, reminding me about the Bank of Canada under Tiff Macklem. I imagine he's just going to try to stay the course through this crisis.
Oh, I think so. I think, I mean, there are two sides to this. Do we think we're going to see negative policy rates from where we are? I don't think so. I think it's pretty clear that the bank has communicated we're at the lower bound already in terms of interest rates. Are we going to see rate hikes? Probably not for a few years down the road. There's just too much capacity out there in the economy to absorb. What could we see? I would say maybe some kind of forward guidance. I know Tiff Macklem in his last stint at the Bank of Canada was pretty pro forward guidance, so we could see something on that front. And then, of course, the asset purchase programs, be it the quantitative easing programs buying GOCs or Provies or whatever the case may be. I think if the market starts to struggle with the amount of issuance that's coming down the pipeline, you could very easily see the Bank of Canada step in and tweak that program to offer support as well. But as far as interest rates go, I don't think we're going in either direction for a very, very long period of time.
Robert, great to get your insight on this. Thanks for joining us.
Great. Thanks for having me.
Robert Kavcic, a senior economist at BMO. Well,